Okay, hello there, guys. Sorry, a little bit delayed. My computer was just going wild trying to share the tab. CPU is going crazy, and I don't really know why because I have a decent sized computer. So I don't know why it's going a little bit crazy. Chrome using all the CPU up, all the RAM, right? Let's get into this. Here we are. Hi, Wizzy. Good afternoon. Good afternoon, Vincent, too. Hope you're doing well, guys. We're going to be going over the core PPI and PPI numbers and unemployment claims, which are coming up in around about 12, 11 minutes or so. Have a little look at a couple of markets that it could impact, a couple of levels to be interested in, couple of markets to maybe just keep an eye on. Definitely looking at the sort of the yen at the minute. Yen seems to be getting stronger, so I quite like the idea of looking at yen at the moment. Also quite like the idea of a little bit of a play on potentially silver, but I'm going to wait for the data to come out before we kind of go into that one. We are seeing a lot of stock markets rally into this data, so maybe a little bit of a precursor to what could be coming up. But we've had some big data, haven't we? We've had a lot of data coming out of the US the past couple of days. CPI came in at 0%, down from 0.3%. We had the core CPI, which came in at 0.2%. And CPI year on year fell to 3.3%. And that's what the Federal Reserve were kind of looking for, essentially. Although the Federal Reserve not really interested in cutting rates right now, they still want to see a target of inflation coming down towards 2%. I think the 2% is now going to be sort of the bottom line for inflation, and they're going to let it kind of float above that. Maybe it's the range of 2 to 3%, but we're still above 3% at the moment on the inflation rate. So, and if we don't see any kind of changes in the labour market, the Federal Reserve are going to keep rates significantly higher. They said basically that if there was a significant change in the labour market, that's when they'll pull the trigger on cutting interest rates. So unemployment rate has rose to 4%. I don't think they'll want to see it get to 5%. I think they'll want to keep it below 5%. So I think a cut could be on the cards potentially in September if we do see continuing downside data. Now, the data that's coming up today is core PPI and PPI month on month and the unemployment claims. So unemployment claims is going to be a big one to look out for as well. If we see an increase in unemployment claims, that gives us a little bit of an idea of what's going on in the labour market as well. Essentially, if we look at this, it's the number of individuals who have filed for unemployment insurance for the first time during the past week. If we take a look at the graph of this, let me just go to a line chart. On average, we are starting to see this climb in 2024, okay? So if we do start to see any kind of upward ticks in unemployment claims, I think that's going to be pretty bad for the US dollar, okay? The dollar at the moment not doing particularly well this week, considering the fact that we had this drop in inflation. So really speaking, we're going to be looking at a couple of charts of interest. First of all, I want to take a look at gold. So I'm going to just bring the gold chart down, and then we'll take a little look at some areas of interest, okay? So anyone else looking to trade gold today, let me know in the chat. Let me know your feelings across trying to trade data as well. I know it can be a difficult thing to do. Let me know if you've had much luck with that. good day to you, CG, as well. Hope you're doing well. But this is the gold chart. Now, what's interesting me, a couple of things on gold. So I had a little look at the higher time frame earlier. Now, obviously, looking at the monthly chart in conjunction with this data release, you know, we're not going to be looking at that in terms of just one data release. You're looking at sort of the bigger picture when you're looking at overall trend. But I quite like this area down in here on gold. Lots of consolidation. We had sort of the market was in a range at this point between that around about that $2,077 down to sort of 1630s, and then the market breached that range. Let me just take the period separators off there. And we've obviously experienced some good upside in gold, right? We're on this monthly chart here. Now, what's interesting to me is the price action here. Okay, so looking at the two sort of wicks to the upside there, is that showing us a little bit of exhaustion coming into the gold market right now? You know, are we going to see gold continue to rally, or is it going to try and breach the lows? Now, I'm only interested in gold shorts below sort of this monthly low. I'm not really interested in it unless price achieves that. So if we do breach that monthly low, which is sort of around 22.77s, then I'll be more open to the idea that gold could be trying to retrace some of this long-term move that's formed in the market. If we look at the weekly chart, we're in a bit of a trading range here. The market trading between these two kind of areas of support and resistance right now. And basically between those swing highs here and these swing lows down here. Now that can be refined a little bit better on this daily chart. So what I'm kind of looking at on the daily chart is the idea that price could potentially respect these lows. Now, I actually liked gold longs at the beginning of the week after NFP, because typically after non-farm payroll, you can get a couple of days of sort of retracement. And we did get that back into these lows that formed. But since then, today, we're starting to see a little bit more downside in the market. And that to me is a sign. You know, we've got good support in here, good support in here. You know, is there a lot of buying liquidity below these lows, essentially? That's what I'm kind of thinking of. And are we going to try and take that? Okay, so keep an eye on gold today. Keep an eye on gold today. I think if we rip lower on a, and the only way we're going to really achieve this is if the PPI number misses to the upside. Okay, it's not forecast to miss to the upside. If we just bring it back in, it's forecast to be lower. Okay, so 0.3%, 0.1%. If we get it anywhere near 0.5% or above, I think the dollar's going to gain some strength off the back of that. If we see a decrease in the unemployment claims like is forecasted, so 225 against the previous 229, if we see any kind of revisions as well down on this number, then I think it's going to be pretty good for the US dollar. Okay, not saying that that's going to happen, just saying that is a scenario that could potentially happen. And if we do get a stronger dollar, then I think the idea is that gold could continue to push to the downside here. There is sort of talk as well that gold could be on its way lower because there are sort of rate cuts on the horizon, but we're not really seeing those rate cuts yet. You know, it went from 4 rate cuts to 2 rate cuts, and now in the recent sort of dot plot, although I don't really like looking at the dot plot, but there is a sort of a 1 cut priced into that. So looking at gold today, you know, if we're looking at it in terms of opportunities, where could those opportunities be? And I think if we get a strong US dollar number, the more likelihood for me is to do nothing, because I want to see price kind of break through those lows and hold below those lows. If we see a weaker US dollar, then gold can move to the upside. So what I'm looking for is essentially maybe moves down towards these swing lows here and then failures to close below the low. That to me means we could probably trade the range here and have a little look at some upside plays. Okay, some upside misses. Herc, hard to understand the direction of the dollar pairs today, coming out of CPI and PPI coming up. Put my attention on the indices, DAX and some majors today. Yeah, I like the DAX. I like the DAX. Right, guy, looking at silver, not sure where it will go. Yeah, very similar to gold. Quite difficult to pick out sort of areas of interest. I'm actually in a silver long at the moment, which I'll go have a look at in a moment. Gold looks more clear on the 1 hour time frame as broken trend line and retest, so it's going to keep dropping. Yeah, I can see that trend line. It was just this one through here. I had this marked up on my chart earlier on my trading view charts. You know, breach of that sort of trend line, retest, markets continued to drive lower. Yeah, I don't mind that. Technical traders might be a little bit worried right now. You know, everything's pointing south and we've got big data coming up. So, you know, if I was a technical trader here, I'd be looking to potentially exit that move right now, waiting for this sort of storm to pass with this data that comes. But yeah, I like that. Let's go and have a little look at euro dollar. There's some big levels to kind of feature on euro dollar today. Big level here. 1.0780 is an option expiry level. We talked about that in the video on euro US dollar yesterday when there was an option expiry the day prior at 1.08. And I said these option expiry levels can act as magnets in the market, and the market rallied up into that 1.08. We did then get the fade from the FOMC. So this is the kind of what I was kind of talking about in the video yesterday, was the miss on CPI, rally, and then the fade in the FOMC. That was actually some information that my friend had done as well, and we kind of both agree that that was a good play. And that's where the sort of opportunities are when it comes down to data, in my opinion. If you're trying to trade data, then you need to look at where the potential misses are going to be. And that gives you the opportunity then when the market overextends on that data. Okay. So essentially, you know, if euro dollar, let's say, comes in weaker and we get a move higher, then the fade of that move for me is something I'd be looking into, especially if it kind of breaks into highs and whatnot. But let's go over this data drop first. Let's see how it comes out. Let me know your thoughts. Euro dollar higher or lower. Let's have a little look. So there's some dollar weakness coming out of the market so far that I can see. We saw some stock markets rip higher, NASDAQ move higher. Just waiting for this to come out. Okay, so core PPI misses to 0.0%. Although unemployment claims up to 242. Yeesh. Now that is going to be the kicker, I think. That is definitely going to be the kicker. That move up to 242 is the sort of giving us an insight into what's happening into the labor market there. You know, that is really interesting. You know, PPI coming in at minus 0.2%. No revisions there. Previous 0.5%. We've got no revisions across the board right now. But minus 0.2% on US PPI. This dollar situation right now is starting to heat up a little bit. Let's go have a quick flick over to gold, wherever I put gold. I really need to reorganize what I'm doing here. Gold starting to move back to the upside here, and this would be my worry. If I was short here on gold, you know, that to me would be something I would be worried about just on the technical basis. You know, I like the idea of price trading within the overall range. It's very, very similar to silver at the moment, and I do quite like silver longs. But euro dollar respecting that option expiry level again. That's the wrong euro dollar. Here we go. Now 1.0780 being respected. Market starting to push back to the upside. So again, how would I kind of play off this data now? Well, it's obvious to me that we're starting to see pressures in the labor market now in the US. Although the last NFP print was pretty good, the unemployment ticked up, which is the one that the Fed are going to be really looking at. So this could really play into the hands of a little bit of dollar downside, a little bit of dollar weakness in the markets. So I actually favor a little bit more dollar downside right now. And I think if you had this kind of move, let's say we would watch it on a 30-minute time frame. What I'd be considering is the fact that, let me get rid of this for a second. Don't need this on here. I want to try and load up my trading view chart. Give me a second. I want to see if my trading view actually opens. Okay, yeah, brilliant. Okay, so this is silver that I was looking at earlier. Let's flick over to this chart. Okay, right. Now let's flick back over to the dollar index. I've just got more information here on trading view. So yeah, look at that big move to the downside on the dollar index. Price is kind of staying between sort of 105s, 104s at the moment. And again, you know, we've got this kind of, it's a really weird situation in the market. We've got data that seems to be slowing in the US, but the Fed aren't necessarily cutting right now. They're really kind of hoping to see an uptick in kind of unemployment, and they're looking for a sort of downside in that inflation, and they're not really getting the downside in inflation right now. Inflationary pressures still slightly there, although obviously yesterday painted a different kind of story. But the dollar looking very vulnerable right now, and the more the data starts coming in a little bit lower, the more market participants will feel that the Fed are going to cut, and that's what they'll be betting on. And that's how you can see a currency start to depreciate. So it could be good here for some dollar weakness trades at the moment. You could be looking at sort of your gold longs, silver longs, euro dollar longs as well. Although euro is a little bit of a one I'd probably stay away from. The one I probably would go for is dollar Swiss shorts at the moment. You know, like this move up into 0.9. Swiss franc has been a good, strong currency as well. And we're seeing this kind of downside play here. So for me now we've had that data drop, you know, it kind of cements a few ideas for me. So I would be more on the side of just wait a little bit here, see if you get a retracement phase, and then look to kind of continue to try and trade to the downside. You know, I like this kind of move here on dollar Swiss. We've been talking about this for a while. If we could get maybe a move down into these kind of areas here where you've got, oh, didn't mean to press that one, this one, here we go, into this kind of volume down through here. So, you know, if the market could try and break that 0.89, then there's good chances it could go to the other side at 0.8760. Let's see how dollar yen's faring up with this. I really like yen shorts at the moment. Sorry, yen longs essentially. Let me just have a quick look here. I just want to have a quick look how my silver position's doing. Okay, silver's starting to come back on side for me. I got into it a little bit earlier, so I'll go show you that in a moment. But dollar yen, like the idea here, we've got potential for a difference between central banks. Fed, if the data starts coming in lower, could potentially cut rates. BOJ tomorrow, potentially going to hike interest rates, or at least do some bond tapering. So the yen could start to get a little bit stronger. So we need to watch out for that one, essentially. Welcome, Azalano. Hope you're doing well. Hope you're having a good day. Let's go down to pound yen. Really like the idea of being short pound yen recently. The market is starting to move a little bit lower now. I actually took a losing trade on pound yen yesterday. I tried to get short in here, and unfortunately just got wicked out before price went in my favor. So I've basically been watching this zone in here around about that 200 spot 50 handle, and I've been looking to see how the market reacts in at this point. You know, do we get the market coming into the swing high and rejecting it essentially? So what I tried to do, if I just sync that in the layout there, I took the early move essentially. You know, look at this 15-minute time frame, tried to get short in and off this area here. And, you know, how many times do I tell you guys to wait for price action? And I didn't do it myself. You know, the market came in, tried to get short early. It then created the head and shoulders pattern. This was the data yesterday out of the US, the CPI data. And then the market fell in line with my expectations down into the sort of daily swing low, which is just kind of bread and butter for me. And I didn't take my own advice on this one. Tried to front run it. Tried to get in a little bit early. Put my stop loss at 200 spot 85, which is a little bit annoying because if I just stretched it up to sort of the 201s, maybe would have been still within that, still in that trade and probably walk away with a profit. But didn't take my own advice here yesterday. Markets come back down. We've then breached this morning. There's a very strong bullish pattern on this, actually. I don't know if anybody looks at these type of trading patterns within the market, but let's go to an hourly chart. Sorry, no, 30-minute chart. There was this bullish pattern here this morning, which I was very tempted by. We had the market kind of rally back into the highs. And then what you see is a market that is producing higher lows going into a level of resistance. Very bullish trading pattern. And the market obviously did end up punching higher there and rallying higher. So I do like pound yen downside, though. I do like the idea of being short this market. There's a couple of I guess technical indicators that could help us with this in terms of market is now making a higher high. We're getting a sort of lower high on the stochastic on the daily time frame. That is the same if I go to a 4-hour time frame as well. If we look at the 4-hour time frame here, you can see the market's making consecutive higher highs, but the stochastic starting to make lower highs here. So, I like to use divergence. I think if an indicator or price is doing one thing, an indicator is showing something else, there could be a good opportunity for a reversal there. Hi, Bongo. I was wrong on my New Zealand dollar yesterday. That's okay. The idea, everyone gets it wrong. Everyone gets it wrong. It's about, risk. As long as your risk is appropriate, it doesn't matter if you get it wrong, right? Doesn't matter. It's not personal. Remember, it's not personal. It's just you had an idea, you tried your idea, and it didn't work out. That's what risk keeps you in the game. Hi, Ratish. Hope you're doing well. CG, just long GJ. So CG going against my analysis, which is fun. So yeah, long GJ. I'm going to go short GJ. I'm looking for downside on this particular market. And I wouldn't mind looking for shorts, especially if we had this type of move in here, market down into that low, pullback, continuation. I'll be looking for a lower high move on that type of opportunity. Third after news move, we are booming up. Gold is retracing a bit. Where to look for entry? Daily on gold has a big bottom wick now due to news. Will it come down? Calm down this big wick. Yeah, let's go over to gold. We'll go over silver as well. I have got a position in silver at the minute. I am long silver. I basically wanted to see if these lows would hold that were forming around $29. If you look at the 4-hour time frame here, just sync this into the layout. I like to be a buyer from lows. So this makes sense to me to be a buyer. If we go to the 30-minute time frame, one thing I look for is the higher high, higher low pattern, or the higher low. And you can see that we've got that higher low. I did get in a little bit early on this. I actually am long around here. Stop loss below the swing low, looking to try and target. Let's sync that as well. I'm looking to try and target this previous high. So 4-1 on that trade is what I'm kind of looking for at the moment. Whether it comes off or not, obviously, different question. But I've allocated appropriate risk, what I feel is appropriate risk there on the lows. I'm going to try and take a little bit off the table if we get up here. If we get up to that 30 spot, 17, I'll look to take the majority of the trade off the table. Okay, I'm going to add an alert on that horizontal right there, just so I've got an alert in place. So that's current position. Gold, looking at gold, I like the sort of theory there in terms of you've got this kind of wick retest, I guess. The market's starting to push higher. Again, I wouldn't mind it gold being a little bit lower. Again, I like to trade from highs and lows, so I didn't really see the opportunity here on gold, apart from the original one which I took down here. don't see the trade there right now, to be honest. I'd rather see price coming a little bit lower. Let's have a look at it on the 4-hour time frame. See if there's any kind of 4-hour lows that we can have a little look at. Yeah, potentially sort of in there, maybe. There's some lows that the market is kind of playing with there right now. But I wouldn't mind seeing this retrace the whole move that we had yesterday. Not yesterday, sorry, Friday, NFP move. I wouldn't mind seeing that move. I just think if I look at the two charts against each other, if I look at gold and then I look at silver, you know, the difference is, to me, silver is at an area where I can allocate risk. You know, I can allocate risk below that low. I don't see the same with gold right now. Like, if I was looking at gold and thinking to myself, you know, I like the idea of being a buyer of gold, where's the best possible price I can try and get in? For me now, it's down towards these lows, and it's just from a risk reward perspective. You know, I'd rather be long here because my stop loss can be tighter, you know, and I can allocate less risk to try and get more out of it, right? That's the way I like to do things. But if I'm going in long around now, my risk reward is just gone. I can have like a 4 to maybe 5 to 1. Not saying that I tried that whole move, but the market's got to move less to achieve more for me, basically, at that point. So I prefer silver. Whether that plays out or not, again, I don't know. Different sort of situation there. We've got a nice sort of weekly high as well. I mean, I've tried to catch silver a couple of times. I was very bullish silver, and I've pretty much caught sort of every bottom. Managed to get out of the trades with some success. So, you know, that's why I like trading from the lows, essentially, looking to do that. All good, Ratish. Good to hear. Shorted GJ yesterday. Yep, same for me. CG, Azalano, euro, dollar. Yeah, euro. Quite like a little bit of potential upside on euro. You know, it's quite interesting, this weekly chart, right? You know, we've got this kind of downside play. I've been a big dollar bull, right? I like the idea of being a buyer of the US dollar, but even my mind's starting to think about that a little bit more, because the labor market statistics for me are what's giving it away. Seeing that jump in unemployment claims is kind of making me think as well that there's a good idea that this market could continue higher. And if I look at this weekly chart, there is an idea that there might be, you know, this head and shoulders play, you know, and if that does fulfill, you know, let me just go full screen there. And if that does kind of fulfill, you know, we could be seeing prices back up here, back up towards the 1.1, maybe up into the 1.11s. Yeah, I just think the market's trying to price in this dollar cut now, and any data that supports it, we're seeing big dollar downside. And yeah, that's what I'm kind of focusing in on at the moment. Euro dollar, how would I try and take action on this right now? I'll be trying to find some lows. You know, the daily chart, the close quite bullish yesterday. If the market rallies from here into that high, I'll be looking for a pullback into those lows to try and maybe trade some kind of flag pattern that had been forming in the market. If that does form, yeah, that's a very strong rejection of these lows right now. Like even the hourly, maybe this 1.0780 might be something to hold. You know, if we trade back down towards that low there, it could be a good idea to think about if the market starts going long down at this point. But think about it in terms of volume as well. Look, we've traded lower, created volume overnight, as well as sort of early London trade, and we broke out in the afternoon, and then we've come back and we've retested that volume. there's going to be large volume in this area now. It's whether price gets accepted back within it or whether the market feels that this is an adequate place to, go short from, essentially. Below yesterday's value area low as well, which is interesting. If I was on my Euro futures chart right now, I'd be looking at the footprint and I'd be looking to see if there was any aggressive selling coming in here right now at this area, to see if there's an opportunity to kind of trade that. But on the flip side, on the other side of that, to play devil's advocate, we got that weaker dollar data. Maybe something like this is going to be a bit more of a play. See if price can try and close back towards those highs. Trying to see if there's any big levels around here. Yeah, coming back within yesterday's value area is interesting to me. It's one thing I don't like about TradingView. It changes every time you change the row size. That should be fixed. That should be fixed. Volatility index staying fairly low. Let's see how this has impacted those stock markets then. NASDAQ was flying yesterday and in early session trading. Today started to see a move back now. Look at this daily chart in on the indices. Crazy. Sid, appreciate the outlook. Thank you, sir. You're welcome, Sid. Also, you think we will come to 2,300 on gold as today? We just missed it. There's a demand pending. Let's have a quick look. 2,300. Yeah, I don't mind 2,300. Look at that, though. Look at this volume profile. Value area low, just wicked into it on the data just before the data. Markets took off to the upside. So, yeah, I don't mind longs here on gold. I just want to be long from an area where I feel there's a good area to be long from, especially when it comes to risk reward ratio. If you're day trading, that's a different thing. If you're day trading, that's a different thing. You can be looking to try and take advantage of minor moves within the market, right? So if you're down on this sort of 15-minute time frame, you want to be looking more towards kind of the area where price found support from, where buyers stepped in, because sometimes the market will go and test that before seeing a continuation there. That's the way I'd play it, again, because I've got a place where I can place my stop loss and I know that I'm kind of wrong at that point. So I would prefer to see a little bit of downside before seeing a continuation. It's very easy to try and chase the move, right? You see this big move up, you think you're going to miss out. People start piling into longs, but you're piling into longs at highs. Don't do that. Don't do that. I would much rather be wrong towards the lows than be right here, because my risk reward is just gone. It's just gone at that point, and the market's got to move a lot more to even achieve anything. So I'd want to see a pullback. Maybe if we had a bit of a VWAP on here as well, we could see how the price is. That just tells you how balanced the day is. Immediately looking at that VWAP, let me just take off the volume profile a second. What I mean by a balanced day is just that the market's range bound. We've had this data again, which is kind of poor for the US dollar, and we're still in that sort of balanced day, right? Where the market kind of trades between 2 points. So on the VWAP, these traders here trying to sell between these bands would be, would be pretty happy today. trading that kind of style, trading that range. You know me as well. Really like trading ranges. Let me see. So we're trying to come back a little bit now. Might have a flick over to the DAX actually, because the DAX is an interesting place. I actually did a webinar yesterday on a trading strategy, which is just basically using highs and lows. I need to go. Up. And I basically talked about a long down here yesterday. And the long trade that I took in the live stream or the webinar was a breakout of these highs, stop loss below these lows, and a target back up towards the daily high. And that worked out pretty well. That's worked out pretty well. And now price is back down towards this area of support on the DAX, which are these daily swing lows again. So I like to be a buyer from lows. You know, to me, this is looking like something I would try and trade. But what I'd probably prefer to see is a 30-minute setup. So like yesterday, there was a nice consolidation build up. So that told me that maybe there was a potential that if price did break out higher, that it could move higher. So now I'm kind of looking for something similar, either a retest of the low and a failure, okay, signaling a bit more upside, or if we do get a consolidation like yesterday, just a big consolidation here, I'll look for the breakout and the potential move higher, okay, because I do quite like that potential idea there, especially in line with this sort of daily time frame. If we go to the weekly as well, sorry, wrong chart. Look at that weekly price action on the DAX. Those wicks to the downside, that is something I like to see. You know, it's telling me that there's a real failure of trying to break lower. You know, we could argue that maybe price was trying to come and test this area here that formed before seeing large aggressive breakouts. And we're in that zone now. We're in that zone on the DAX. So I like the idea of maybe looking for that kind of move there. But we have to be patient, have to wait and see how the market performs at that point. Thank you, Sid. Appreciate that. Can you please talk on 4 indicators you have on your chart? Yeah. So it depends which one you're doing. If you're looking at sort of day trading moves, then I've got a VWAP, which is a volume weighted average price. Also have the volume profile on the charts. That's probably not going to show up because you need to change the row size because it's on the commodities. Volume profile as well, I find very helpful when it comes to sort of day trades and opportunities. Haven't done a lot of day trading recently, just every now and again when I got a bit of spare time, just try and scalp a little bit on sort of gold and whatnot. But other than that, I've got a 50 moving average on the screen because I like to be a buyer if prices above the 50 MA. I've got a stochastic oscillator, and this is just there for me to look for divergences within the markets. You know, it's just not necessarily there to look for the overbought, oversold condition. I'm not really looking for that. I'm looking for sort of divergences. And what I mean by that is if price is making, let's say here, for instance, price is making lower lows. If the stochastic was making higher lows, I'd be looking for an opportunity around that. And then I've got an ATR. So that bottom line down here is the average true range. So we'll just click on that. Average true range, period 14. And basically what that does is it takes the last 14 candles, divides it up, gives me an average price movement on that. And that's where I can use to sort of either use as targets or use it as stops, which is what I typically use it for. It's just to make sure my stop loss is in place in line with volatility, essentially. Sorry, Ryguy. I just saw Vincent saying, how would you approach Aussie CAD longs? Let's have a look. Yeah, Aussie CAD just keeps going, doesn't it? Just keeps going. Again, this was a market we liked. I didn't necessarily like it at these highs because we were at highs, but since we've broken out of it, the market has continued higher. How would I approach this for longs? Again, I'd be looking for lows. I feel like maybe we've missed an opportunity here, for instance, because price came back into these swing lows, rejected it. Which would have been down here on this 30-minute time frame. That consolidation, breakout. Right, that's what we want to be looking for. Price comes into a level, consolidates, breakout as well. Market moves higher. How would I approach this? I try and see if the market forms a low. That's the only thing I can kind of suggest. Like down here where you've got that consolidation build up, the market starts forming lows around that 0.90 sort of 75. I'd be looking to get long on those type of things. At the moment, we've got this low being put in at the minute, which is sort of 91.30s. So if that low can hold, so essentially what we could see is like a move like this, right? And then if that holds, we could then look for a decent breakout to the upside on that. That's the only way I would kind of look to go long now. Because again, you can define your risk. You can put your stop loss below this swing low. And then if the market does continue to push higher and change trend, then you've got a good target, which is this high, 91.70. And then if it continues, you can try and hold on to that as well. But would I get long right now? No. I'd be waiting to see if there's a good sort of pullback down towards these lows again. You've got this almost head and shoulders pattern. And we talk about this all the time. This is the 30-minute time frame. If I go back to that 4-hour time frame, looking left, it's a little bit of resistance, previous resistance as well. But you can see the potential for the head and shoulders, and the market tends to find support at the left shoulder, right, of the pattern. So although you might think head and shoulders aren't the way to go, I actually think they're pretty decent. So yeah, maybe a little bit more upside, wait for a little bit of a retracement phase first, Vincent, and then go into that. Right, guy, CAD Swiss has been consolidating for the whole week. Do you have a bias for it? Let's have a look. I don't know if I do have a bias on CAD Swiss. I actually like downside CAD Swiss, if I remember rightly. I like downside. It has been kind of doing nothing now, hasn't it? Last couple of weeks, we've had a really good breakdown. This week has just been nothing. Whether that's because price is coming into a bit of support. This might be an area where these sellers felt it was a good area to get out of their positions. But usually when you see consolidations here, after a large move, you want to be looking for the breakout now. So I don't think this is necessarily a bad thing to look for, actually, Rygar. I think you've got this consolidation now. Set an alert either side, and depending on your bias, look to trade that way. If we look at it in terms of volume and consolidation, well, I'm looking at volume here. Volume is going to be all the way up there because you've got that sort of consolidation in the market. So if we were to breach the upside, I think the market would probably try and test higher prices there. The Swiss franc has been fairly strong. Let me see if I can get my let's see, strength meter. See what the 50 MA one's saying first. So it should be a buyer of Swiss franc, seller of CAD, seller of Aussie. What's the main boy saying? Swiss franc has a +7 I've got. So there's an idea that it's the strongest currency. So if we go to the strength meter, it's the strongest currency, right? But it's in that reversal zone. So I still like the idea of buying it for now. If we started to see some downward ticks in this, you know, some moves lower below that sort of that +5 area, I'd be concerned about the strength in the market at that point. But yeah, how is it faring against pound? How's it faring against the pound? Let's have a look. CAD might just not be moving because it's not really been great recently. Let's have a look at pound Swiss. Very similar, isn't it? But a big move down. We're just getting a very shallow pullback now, which isn't bad. You know, that slow pullback tells me that there's not really a lot of buying going on. So, you know, if you look at it, we've just kind of been contained within this daily candlestick. Right? There's been no real kind of movements outside of that. So this could be another accumulation to try and drive prices lower again. And a way to kind of try and spot those moves, if you go to like a 4-hour time frame, this is what I try and do. I try and highlight the highs, you know, and I say to myself, if price fails to make a new high, is that a sign that the market is going to fail? You know, we've got this almost area here where you've had strong selling pressure. So maybe the market wants to come and test that before seeing a bit of a move to the downside. We've had quite a strong 4-hour reversal there in the market. Right? Strong 4-hour reversal there. So if I go to my 30-minute time frame, maybe if price rallies back up, we can get a lower high situation and we could look to potentially trade that move there. But yeah, CAD Swiss is looking a little bit different, isn't it? It's got that sort of base being built right now. Let's have a look at the majors. So we need to look at dollar Swiss and dollar CAD. Dollar CAD right now potentially moving higher. That does highlight some CAD weakness. Dollar Swiss kind of in the same boat. That's probably why we're getting that range. The two markets look very similar in terms of how they're trading at the minute. I am favouring that Swiss strength though a little bit, but I wouldn't be short yet. I'd be looking to get short higher up. So maybe if you're looking for a Swiss move, wait for your dollar Swiss to be up towards that high there, that sort of 89.80 or 0.9, and then look for you across your Swiss pairs for an opportunity. Sid, truly appreciate the genuine breakdown. You're welcome, Sid. Thanks for joining the live stream today. Hi, Ride Guy. Thank you. Sorry, why am I saying hi again? I've already said hi to you. You're welcome. Hi, Royston. Hope you're doing well, mate. Yeah, but dollar Swiss is definitely the one there. Let me know what you're trading there, guys. I did try and trade Kiwi short this week, so a little bit different to Bongo. I tried to get short, and I again. So you know, Bongo, you said you got stopped on a move. So did I. You know, I got stopped on Kiwi dollar. I've had trades this week where I've been on the right side of the market, but I'm just getting wicked out on my stop loss, which happens. You know. I tried to get in early on a couple of different moves. So yesterday, basically, I tried to sell in and around this area here after the CPI data because I was expecting a little bit of a move down. And yeah, so I think I was short in and around these lows here, sitting around that 62 handle. My stop loss was just a little bit tight. I tried to be a bit cheeky. Had like a 15 pip stop loss and yeah, got taken out unfortunately, and the market moved back. But we're in that 6200 area again, which is quite interesting. You know, I don't mind looking for shorts from that handle. But yeah, look at that. How are you meant to put your stop anywhere? So the first thing I ask myself, if I'm getting into a trade, where do I need to put my stop loss? You know, if I'm going to get involved with it, well, my stop loss has got to go up here, right? So immediately, price needs to move at least 44 pips to kind of help me out here. And the daily average range is 45 pips, right? So I need the market to move its full daily range in order to me trying to get something out of this. Whereas if I try and get short up here, I can have a tighter stop loss, less risk, right? In terms of risk, in terms of pips. And I can try and boost that reward by using that sort of daily ATR as my kind of full target. But that's like 3 to 1 at that point. So I only really like this if we can get higher, because I just feel like at that point you've got a better sort of opportunity there. Royston, what is your thoughts on dollar peso? That is a tough one, Royston, at the moment. I haven't looked at it fundamentally right now, and I know there's obviously some fundamentals going on with dollar peso. Where have I put it? Don't know where I've put it. Might just have to. Because we were talking about potentially shorting this market, right, to get the benefit of the spreads, the swap charges. And that was in and around this area here. And as soon as it broke out of there, you know, look at that move that followed. Seen a lot of weakness in the Mexican peso. And we did see this kind of across the board as well, especially in the sort of exotics. It wasn't just the sort of dollar peso, it was other markets as well. But yeah, that is a monstrous move. I don't really feel like I want to be on the back of anything there, to be honest. Don't see any benefits to short in that right now, unless you're looking for some kind of technical play. You know, perhaps a sort of downward move from here. It can move very, very quickly, though. Just trying to have a little look about what happened in around the election time. So we're kind of shot up in line with that dollar strength. But yeah, I mean, I like the idea of dollar weakness, but against the Mexican peso, I don't really know. I haven't looked at it fundamentally. I do know there's stuff going on with the Mexican peso right now. Yeah, Mexican peso makes a marginal recovery after losing over 8% in the previous week. Okay, so I guess this is what it was. Let's have a quick look at this Reuters blog. Mexican peso stocks tumble on fears of ruling coalition, supermajority in Congress. Stocks focus on Monday, weakest the dollar since November after the country's ruling party scored a surprising strong election result and looked poised for a supermajority in Congress. That markets fear might bring constitutional change and diminish checks and balances. I was going to say, wasn't there an election, actually? Yeah, because I saw something like 22 candidates were killed or something. Something mad like that. But I can't remember, can't quite remember. I have to do a little bit more research on it, Royston, if I'm honest. I don't know what's the in and outs going on with the Mexican peso right now. Obviously, dollar side of it, we know potential. You know, technically, everyone's saying that the Fed was hawkish yesterday. I don't quite see that. They've kind of been hawkish because the dot plot says it's been hawkish because they've reduced the chances of a rate cut this year. I don't necessarily see that as hawkish because if we look at the underlying data, you know, we've got downside in GDP, downside in the labor markets. I don't quite see the hawkishness out of them. If anything, it was just like, well, the market's healthy, but if we do see any kind of shocks to the labor market, we will have the ability to cut rates. So dollar's obviously rampant at the moment against the likes of the Mexican peso, but you know, maybe short plays here aren't a bad thing. You know, maybe the Mexican peso might kind of hold itself a little bit steadier over the coming days, and then maybe you can look for a short. Positive swaps as well, so I think you can always benefit from that. Always benefit from some positive swaps. Okay, right. Royston, also Swiss yen, it's been in a bull run since circa May 2020, and Swiss doesn't seem to be running out of steam, and yen red flag news in the morning. Yeah, I'm kind of staying away from Swiss yen right now, Royston, to be fair. Although, I mean, look at that. It looks nice to short it, doesn't it? I think naturally we want to fade that move. But again, you've two sort of central banks that are fairly similar in a way, you know, in terms of low interest rates, whereas the Swiss National Bank obviously cut interest rates recently, but this data out of Switzerland has actually been okay since then. They want to make a Swiss franc that's weaker, but it's not actually coming through at the moment. The Swiss franc has been fairly strong. Japanese yen, on the other hand, has been very weak, very, very weak. But we are starting to hear some sort of rumors that the Bank of Japan could potentially hike interest rates if the sort of recent wage increase impacts their inflation. So, you know, I like the idea of, don't get me wrong, if there was a trade here, I would be all over it. But I think since we saw that sort of initial breakout and retest of this consolidation over here, the dynamics in the market changed. They changed. And it wasn't necessarily the fact that the yen was just on a sort of move there to get weaker at that point. And then obviously we had the intervention, supposed intervention, and then ever since we've just kind of declined. I like the volatility on Swiss yen, I really do. But I mean, if you're going to trade this, I'd be looking at shorts from highs, longs from lows. I wouldn't try and look for any big moves here, and I'd keep my risk super low on that. But I do like I said, I do like yen plays. Even going into tomorrow, I do like yen plays. You know, I've been eyeing up a bit of pound yen here. We're seeing some kind of potential divergence on the daily time frame as well as the 4-hour time frame. Just watching the 30-minute now, seeing if I can get some kind of decent price action on this. You know, we've kind of got maybe a play for a bit of a head and shoulders pattern, but you're going to see if we can climb a little bit higher in price, maybe back up towards these swing highs, and then see if I can get some kind of opportunity around there on pound yen. And I'll hold that through tomorrow because I'm not going to put mad risk on it because our risk reward ratio is going to be pretty good here. So I have like a 27 pip stop, try and aim for something like a 2-to-1, or I do quite like this 200 level down in here. We've got a good risk reward ratio there. So that's what I'd be kind of looking for on regards to the yen. I'll be watching the yen. Our event tonight, they are reluctant to increase interest rates, but it should be interesting. Yeah, it will be interesting. It will be very interesting. I think they're more pushing towards sort of bond tapering than more than anything. You know, they are reluctant to increase rates. It's very interesting, isn't it? Japan have kept rates low for a very, very long time, and they're not really experiencing inflation like anywhere else, you know. And I find that fascinating. But the problem they've got now is just the sort of, it's impacting consumers. you know, the yen's not going very far from anymore. You know, it's not going very far from anymore. You know, it'd be great to go to Japan on holiday, I think, you know. You'll get a lot of yen for your pounds. What time tonight? Royston, what time tonight would that be? I will be waiting for the data releases. Let's have a look. It's usually more tentative. Let's have a little look. June 13th. It says undecided online. So you can go to this release schedule. Bank of Japan release schedule. And it's got undecided. But it'd be early in the morning on UK time. But if you want to check this out yourself. There you go. Right, let's see if that one plays out there. What other markets can we look at? I don't think there's much more to look at now. We've had that data. It's just kind of seeing how the market's settling down at the moment. We did obviously have quite an aggressive drop. Markets recovered that now a little bit. So it'd be interesting to see if we do get that continuation there. I still quite like plays on silver to the upside at the moment. I feel like that's a nice potential move there. Again, that's just because the market has found a bottom in the market. We've tried to breach it. We've held, tried to breach it again, held. So I quite like the idea of potentially seeing some further upside to this move. Might not be the way. The market might push lower because we've failed to break highs really or close above highs. I'd like to have seen price close above that high, to be honest. But we'll see. You know, again, allocated risk there that I'm happy with. Oil seems to be continuing to push higher, even though there's potential signs of demand weakening there. Overproduction is what I'm hearing or seeing out of a lot of news reports at the moment. So whether that has any kind of plays to look into. Bond yields moving lower, that should be bad for the US dollar. So keep an eye on those as well. You know, give you a little insight into how the dollar could potentially perform going forward. So is there a reason why the news releases are always tentative? I've never actually kind of looked into that. I guess it's because I just kind of looked into it. It's just talking about press releases and stuff. But I never actually looked into that myself. Good question. Maybe we can ask that to the group, see if anybody else knows. Royston, Nat Gas is another interesting one to watch. Yeah, definitely. Nat Gas is definitely an interesting one to watch at the moment. It's been on a little bit of a run as well recently. Very strong run in price. But yeah, looking at Nat Gas is interesting from that sort of fundamental play. I think seasonally as well, Nat Gas typically performs quite well this time of year. I might be wrong about that, but let me just have a quick look. Pretty sure Nat Gas does have a pretty good run. Let's have a look. Natural gas, where are we? June, yeah, April, May, June. Actually, June's meant to be pretty bad for natural gas. It's July, this is a good month. July is meant to be the good month for natural gas. So seasonally, coming up into a potential bullish period. We're not really seeing the down period through June, have we? So maybe some moves up into that 3 point sort of 3 area on natural gas. I remember we had some beautiful trades on natural gas last year, you know, all down through this area here. Market came up, and now it's looking pretty bullish. If we look at the 4-hour time frame, yeah, some nice moves there. I think last time we were basically just selling every rally that came in, which was good. So, yeah, maybe some longs on some pullbacks might be nice. Maybe some moves into some lows. Have a little look at how the market could perform there. Right, guys, we can go for about over an hour now, so I'm going to call it quits there. Thank you to everybody that joined me again for the live session. I really appreciate it. I will catch you next Tuesday at 2 p.m. again, and we'll go over some markets to watch for the week ahead. And yeah, have a great rest of your day. Have a great weekend, and I will catch you soon. Cheers, guys.